You hear the words fixed annuity, and what comes to mind? Probably safe, guaranteed, set in stone. But what if I told you there's a hidden risk that can silently eat away at its value over the years? Today we're going to pull back the curtain on exactly what that risk is, and more importantly, show you how to build a rock-solid defense against it.
And really, this is the question that cuts right to the heart of it. A contract can guarantee you a certain number of dollars every month, for sure. But can it guarantee you the life you want to live in 10, 20, or even 30 years from now? Well, that's where things start to get a little more complicated.
So first things first, let's make sure we're on the same page. A fixed annuity is basically a deal you make with an insurance company. You give them a chunk of money, and in return, they promise to pay you a fixed, predictable income. On the surface, it sounds like the perfect, worry-free plan for retirement. But there's a catch.
Here's the twist. That very thing that makes it so appealing, that stability, that rock-solid guarantee, can actually become its biggest weakness over time. Let's see how this plays out in the real world. Okay, so picture this. You're in retirement, you've got your annuity all set up, you know exactly how much money is hitting your bank account every single month. It's reliable, it's predictable, it's fixed.
And here's the problem. While that income stays exactly the same, the cost of, well, everything else doesn't. We're talking about groceries, gas, healthcare, you name it. It all keeps going up. The culprit, of course, is inflation.
Wow, this chart really paints a picture, doesn't it? Let's say you have an income of $30,000 a year. Feels pretty comfortable today, right? But look what happens over 20 years. Even with just average inflation, the buying power of that same $30,000 can get cut in half. It's like your income is standing still while the world gets twice as expensive.
And this is the part that's absolutely critical to understand. Once you lock in that fixed annuity contract, there's often no going back. You can't just call up the insurance company in 10 years and ask for a raise because milk costs more. The decision you make on day one sets the stage for decades to come. You have to plan for this stuff ahead of time.
But it's not all doom and gloom. The great news is you absolutely can plan for this. So let's dive into 5 really powerful strategies you can use to protect your purchasing power and make sure your income doesn't just last, but actually keeps up with your life.
Okay, our first option is something called an increasing payout rider, which you'll often hear called a guaranteed lifetime withdrawal benefit, or just GLW for short. The easiest way to think about it is like an upgrade package for your annuity that allows your income to actually grow over time. So what's the trade-off here? Well, the huge pro is obvious. You get that guaranteed lifetime income. But it also has the potential to increase, which is your direct weapon against inflation. The con? There's usually a small fee for this rider, and your income might start out a little bit lower to help pay for all those future raises.
Another really powerful tool in the toolbox is a fixed indexed annuity, or FIA. Now, this type of annuity is pretty clever. It links your potential for growth to a market index, like the S&P 500. But, and this is the game changer, your original money is never actually in the market, so you can't lose it if the market goes down.
The upside here is fantastic. You get to ride the wave when the market does well, which can really fuel your income growth. But you're completely protected from the downturns. The thing to keep in mind is that the lifetime income itself isn't automatically guaranteed. You typically have to pair the FIA with a rider, like that GLWB we just talked about, to get the whole package. All right, solution number 3 is about as straightforward as it gets. It's called a COLA rider, and COLA stands for Cost of Living Adjustment. This is a feature designed specifically to fight inflation by automatically increasing your payments by a set percentage each year.
The beauty of this is its predictability. You know, without a doubt that your income is going to go up usually by 2 or 3% every single year, just like clockwork. The trade-off is pretty similar to the other riders we've seen. Your starting payment will be a bit lower to account for those guaranteed raises, and honestly, not all companies offer this feature.
Okay, let's shift gears completely for strategy number 4, laddering. This is a totally different approach. Instead of one big annuity, you buy several smaller ones. They're called multi-year guaranteed annuities, or MYGAs. You'd set them up to mature at different times, say in 3 years, 5 years, and 7 years. As each one comes due, you can reinvest the money at whatever the new, hopefully higher interest rates are.
The big win here is flexibility. You're not locked into a single interest rate for 30 years. But this strategy on its own doesn't create a guaranteed lifetime income stream. And you do face what's called reinvestment risk, the chance that rates could actually be lower when it's time to buy your next annuity.
And finally, our 5th strategy. This one is for anyone whose #1 goal is getting the absolute biggest monthly check possible right from the start. It involves something called a single premium immediate annuity, or SPIA, with what's known as a life-only payout. This gives you the highest possible income, but the payments stop when you pass away. You can then use a small piece of that bigger check to buy a separate life insurance policy for your heir.
The pro is simple and powerful. You get the maximum income possible from your money. But, and this is a huge but, without that separate life insurance policy, when you're gone, the money's gone. There's nothing left for your family. So it's a really effective strategy, but it has to be set up just right.
So we just ran through 5 completely different ways to tackle this inflation problem. And that brings us to maybe the most important point of all. You can't just pick one of these out of a hat. The details matter a lot.
Every single insurance company does things a little differently. They all offer different riders, their interest rates are always changing, and their payout structures can be unique. One company might have a killer COLA rider while another is leading the pack with their FIAs. The only way to find the absolute best fit for you is to compare them side by side.
Okay, so with all these options on the table, what's your next move? How do you actually make a choice that you can feel great about for the rest of your life?
You know, this is really where getting some expert guidance can make a world of difference. Navigating all these choices is complex, and here at the Annuity Expert, our whole job is to help you compare all these different products and strategies to find the one that truly protects your future lifestyle. And because we're an independent broker working with tons of different companies, our services are always completely free for you. Look, your purchasing power in retirement is just too important to leave to chance. If you have questions or if you just want to see a personalized comparison of what your options look like, please give us a call at 770-755-1565, or you can visit our website at annuityexpertadvice.com. Building the right plan always starts with having the right information.